Global trade, on the other hand, will resume to normalize as the Strait of Hormuz opens up again. We expect the situation in the Middle East to de-escalate further, which of course is a positive. From whatever angle we'll look at it, the latest conflict in the Middle East will turn out to have been a watershed. We expect inflation to roll over during the summer month. Overall, inflation may, however, remain above the comfort levels of most central banks. Hence, the market is hawkish and expects more tightening from the ECB, but also some from the Federal Reserve and eventually from the Bank of England. We are not so sure. Growth in the Eurozone is subpar, and the new chair of the Federal Reserve, Kevin Warsh, expects artificial intelligence to be disinflationary. Whichever way we look at this, any tightening probably will be limited. Global trade, on the other hand, will resume to normalize as the Strait of Hormuz opens up again. However, things will not go back to the world before the start of the war. Trade routes may change, and so may locations for storing goods and transshipment. The wild card is US trade policy, but we expect there to be more words than action. Three themes currently dominate the world. Of course, the situation in the Middle East, then the ongoing technological revolution of AI, and finally, US trade policy. We expect the situation in the Middle East to de-escalate further, which of course is a positive. Massive investments in AI are of course also a positive, as they have supported growth in the past and will continue to do so going forward. However, any kind of disappointment in corporate earnings or a resizing of their investment may test investor confidence. Regarding US trade policy, the message that is sent to the world will be important. A world of deals and fast-changing rules. Corporates may hold off on decisions until they have better clarity. The upcoming review of the US MSCA, or the NAFTA agreement as it was formerly known, will be a crucial test in this regard. From whatever angle we'll look at it, the latest conflict in the Middle East will turn out to have been a watershed. In this context, countries, big and small, will have to review their alliances and allies. Developments in the Middle East already point in this direction, with a new axis forming from Turkey via Saudi Arabia to Pakistan, while others look towards India. When it comes to supply chains, we are moving from the model of just-in-time, one focused on efficiency, to just-in-case. This will require important investments in capital and will be inflationary. Corporates and countries will have to invest into the resilience of their supply chains and into stocks of crucial commodities. This may support growth, but prices will be higher, and so may be interest rates. Purchasing power, and as a result, wealth, may actually decline.